Welcome once again, everyone. In about 14 minutes, we will see the release of the Canadian manufacturing sales, also known as the Canadian factory sales. Right here, you can see you can see the forecast according to the Bloomberg survey, as well as some of the previous data. Over here, we have the chart, and we can see how actually the Canadian manufacturing sales have been progressing over the course of 12 months. Now, if we look a little bit more specific about what happened last month, well, the Canadian factory sales, according to Bloomberg, fell in August with food and automobile production slowed following maintenance shut. Sales fell 0.2% to 49.5 billion Canadian dollars. Statistics Canada said, while economists surveyed by Bloomberg, they actually forecasted a 0.2 increase. So you can see that it didn't really match their expectations. Food sales fell 1.6% to 7.06 billion Canadian dollars, and motor vehicles by 4.45 billion Canadian dollars. Manufacturing is actually one of the last major sectors of the economy that hasn't returned to levels from before 2008-2009 recession, stumbled by a strong currency and inconsistent U.S. demand. Bank of Canada Governor Stephen Poloz has said the economy lost some production capacity that won't be recovered because of the depth of the global slump. Sales fell in 11 of 21 categories tracked by Statistics Canada, accounting for about 40% of production, including a 22.6% drop in the miscellaneous category to 858 million Canadian dollars. If we look at some of the forecasts and specifically what are some of the economists actually saying, I'll pull a couple of two more charts. There we go. We have some of the economists polled by Bloomberg as well as the summary. So this is just some of the economists, the firms that they represent, their estimates, and the date when they actually provided their forecast. As already mentioned, the median estimate here is 0.5%, highest is 0.8%, while the lowest is 0.0%. Number of economists that were economists are actually 15, so sometimes we get a little bit more, mainly for the US dollar when we have up to 80 economists, but it just happens that for Canada, there's not always a lot of information really available. So this is actually just some of the details, some of the detail aspects. And Alex, is this a little bit too early for you to start? Just a little bit. So in the meantime, we can say, if Dr. Dow, do you actually have any personally fasts? What do you think? Maybe if we could give us like a
That's
heads up.
that's what I'm hunting for now. I'm looking through Bloomberg on what I'm looking at last month's survey and the trend to it, and trying to find the statistic of what they're looking for at the moment. As far as I can tell, just looking through the mathematics at the moment, it looks like it's going to be another non-event, more towards a sideways action, because I read something here. It says that the shutdown shouldn't have much of an effect on it at this point, from or as I like to call it, the slowdown we had 3-4 weeks ago. So I am searching out, trying to find more data at the moment. I'm just looking at the trend over the last 16 months, and how it was up and over versus last numbers. And we can see here that it's been a quiet morning, just on an opinion about the Forex in general. It's been a quiet morning. Maybe there's a particular reason. We have a couple stats kicking out this morning with the Canadian, and then we have some of the U.S. stats coming out at the same time in the economic calendar. We have Empire State Manufacturing. It's funny when we talk about the Empire State Manufacturing Survey. It's, I mean, you're looking at two states next to each other in a sense, Canada and New York State. And at one time there were, major natural resource type of statistics that were very important. Especially late 70s going into the early 80s, we saw these statistics much more important than they are today. and then import-export numbers. We're looking at it in the States also at the same time. So I'm looking at all of the numbers, the Canadian numbers and these two U.S. numbers coming out, and due to the fact that they're both kind of adjacent to the Canadian border, and they're both based off of a lot of the Canadian production. I'm hunting like everybody else. Get it? I'm hunting and fishing like everybody else. But I've come up with something that after your people come up with some numbers, I'll see what else I can find. I'm seeing a projection here on something.
Do you expect any strong market reaction? Do you believe
I'll
this
tell you the
will
truth.
actually be high impact?
Nah, I don't really see that because you know the reason why it's TGIF this week more than most weeks is it's been very exhausting politically and economically. A lot of the stats, like yesterday's employment number, was almost like a non-event, and the contracts almost represented it. In the action we saw at 13:30 GMT when the stats came out, the markets barely moved. I mean, it was really odd. Usually you can get a little bit better pop out of it. I even try to put up option spreads in the middle of that crazy noise, hoping that they take both sides, the up and down of it, and I get a better price. Yesterday was almost a non-event, which was really strange. And I would imagine that unless there's some really major number, I guess what we're all waiting for is Dr. Yellen to take her position. One of the questions yesterday was the statistics that we're seeing right now. Did Ben Bernanke hand her the keys the last couple of weeks? And is she really driving the machine at this point? And due to that fact, you can see the follow through. When you look at Europe this morning and yesterday, we're not seeing a lot of follow through for the U.S. action, and which is usually you see Europe play a catch up. If we make a mad run like we have in the last 2 days, Europe seems to participate. You find it, kicking out at the 8 GMT. You see 9 GMT. You see the action, and like in the last 2 days, you don't see that going on. So I have a feeling that we're moving into this little period of non-event in front of the holidays. The Christmas season is just about ready to come on. We have confusion, total confusion about the healthcare situation, and then we have the Federal Reserve Chairman, as they would say, after putting all this on top of problems, now we have a Federal Reserve change. And I've been trading since Arthur Burns. And so Arthur Burns was before Paul Volcker, and then Paul Volcker was before Alan Greenspan, and Alan Greenspan was before Ben Bernanke. Now we have Yellen. Every time they change a Fed chairman, things have gotten really crazy within 6 months of changing the chairman. And so I think you have fatigue going on. I think that's exactly what I could say we're seeing as actual fatigue.
Okay, well, thank you very much, Dr. Jeffrey. And I also see that Special Effects agrees with you. He says that he does agree with data direction will probably be subdued unless there's a big data surprise. He also added that he's going to go with below forecast. The Canadian economy seems to be losing steam. At least it shows in retail with some data below expectations. In the meantime, I would now just like to give the word to my colleague Alex, who will have a look at some of the technicals, look at the positive and negative outcome, and have a look and comment on the market reaction.
Hi, everyone. First of all, thank you, Kita, and thank you, Dr. Dow and Special Effects for your comments. And actually, I also agree with you both that we'll see some moderate market reaction, as actually this indicator is rather volatile. So I guess it should be strongly better or worse than expected to see some significant movement on the markets. Yeah, but nevertheless, here are some trading strategies how to trade on these data. And as always, here is a positive surprise trading strategy and a negative trading strategy. And once again, that's just a suggestion, not a recommendation. So how to use the upcoming event for your trading. And let's start as always with the possible trading strategy, positive surprise. And as you can see, I have chosen United States dollar and loonie currency pair to discuss. And the suggestion that in case we'll see stronger than expected factory sales, then the pair will depreciate. So the suggestion is to sell at the market price and place the take profit around 104.52, and the stop loss could be placed around 0.479. And the main reasons behind this suggestion is that, first of all, the pair is trading below the 200 period simple moving average. And one more fact is that the majority of technical indicators on the short term are sending sell signals. And I would also like to point your attention at MACD indicator, which is actually strongly bearish on the variety of time frames, meaning that we can expect some depreciation of the pair in the nearest future, as well as in a longer term. Yeah, so as to the negative trading strategy, I have chosen New Zealand dollar and loonie currency pair, and in this case, we'll see the appreciation of the pair and the stronger loonie. Oh, sorry, weaker loonie. And yeah, the suggestion is also to place profit around 0.8714, while the stop loss could be placed around 96.57. The main reasons behind such suggestion is that the Canadian dollar is controlled in the majority of all cases. It's actually more than 70%. And yeah, one more thing is that the pair is currently trading at the strong support line, which is not expected to be breached in the nearest future. Yeah, but I will show you a bit later the charts. And as to on this exact pair, as you can see, they're sending completely different technical signals, and indicators on the 10-minute, 30 minutes, 4-hour chart, and even weekly charts are suggesting the appreciation of the pair, as the majority of indicators are sending buy signals, meaning that they also support the appreciation of the pair. Yeah, and just before we can proceed with the market reaction and some sharing, here's the table of all currency crosses with the loonie, and it also justifies why I have chosen this exact trading currency pairs. And as you can see, there is no clearly marked market sentiment on other major currency pairs except United States dollar and Canadian dollar. And as I already said, the market sentiment is strongly bullish currently. It's 72% of traders are holding long positions on the pair. So now let me turn my screen sharing on. Hope it will be working. Yeah. So let's start with the positive trading touch support line, and that's why the take profit is placed at 104.52, right at the level of the pattern support. Yeah, and by the way, the currency pair is trading in the range of the channel up pattern, which was formed late in November. And as you can see, both quality and magnitude are quite significant, meaning that even slight movements can lead to some substantial profits. And actually, the take profit is placed just 10 pips below the current market price, so it would be a short-term strategy. And as to the stop loss, it's recommended to be placed around 479, and it's currently daily pivot. Yeah, and as you can see, recently market was experiencing some difficulties around this level, meaning that it will be a rather strong level in the short term. So, and yeah, as to the negative trading strategy, that was New Zealand dollar and Canadian dollar currency pair, and as you can see, there's a bunch of support lines just below the current market price, meaning that in the short term the pair is unlikely to be below this level. However, let me just zoom out a bit. Yeah, and as you can see, the pair is trading in the boundaries of rising wedge pattern since August, which is already 350 bars long. And also there is a strong Fibonacci retracement, and once again, the level of 0.8657, it's a key support level in the short term, represented by 0.6%. Okay, sorry. So Gita said that the data came better than expected, and that's United States dollar and Canadian dollar currency pair 1-minute chart. And as you can see, the initial market reaction is strongly bearish. So yeah, And as I said, the possible take profit could be placed around the pattern support, so just a couple of pips left before the retest of this level. And on the minute chart, that's already more than pips reaction, so actually that was even more than it was expected. And we can actually expect some more bearish movement on the pair. Yeah, but by the way, New Zealand dollar and Canadian dollar does not show such a movement, and the market reaction is relatively subdued, just 6 pips. So, yeah, and as I already said, the possible trading strategy on the better than expected data is that the entrance point at the market price and the take profit around pattern support at 104.52, sorry, and the possible take stop loss could be placed on daily pivot at 104.79. So the trading strategy is still working, and I hope it was useful for some of you. And I guess, yep, that will be all from my side. And back to you, Gita.
Thank you, Alex. And you said it moved about 6 pips, so it's actually very, very close to what Guest21 said when he indicated that his guess was that Canadian dollar will move 7 pips at most. So that was a very precise forecast there. Dr. Dow, any maybe last forecasts, any last words that you'd like to say before we get back to your actual webinar?
It moved up. I'm looking at some of the stats out of Toronto, the monthly survey. It just not anything moving. I did see the euro move up, so there was some sympathy with it, and I could see the sterling was moving, and so I see a little positive action from it. But I don't think. I guess again, unfortunately, another non-event. We need some real action, something that makes us traders have opportunity.